This is the Energy Makers Show, featuring the innovators, financiers, and policymakers focused on the global energy demand. Brought to you by NRG, moving clean energy forward. And here's your host, Paul Dickerson.
Hi, I'm Paul Dickerson, and welcome to another episode of the Energy Makers Show. First up today, Sarah Groen, co-founder of the Surge Accelerator, telling us all about their successful first year. Next, we check in with Robyn Knocke, who interviews Erika Bierschbach with Austin Energy. All that right after this.
Where will the energy come from to move us forward? From natural sources in abundant supply, or perhaps a man-made source? At NRG, we believe innovation will solve our energy needs. That's why NRG is moving away from fossil fuels towards wind, solar, and other sustainable technologies to power the smart grid, the electric car, and our clean energy future. We're using all of our energy to develop more of it.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show with your host, Paul Dickerson.
Welcome back to the Energy Makers Show. Our guest now, Sarah Groen, co-founder and director of Surge Accelerator. Sarah, great to have you on the program.
Good morning. Thanks.
So Surge Accelerator, tell us about it.
So Surge Accelerator is a mentor-driven seed accelerator focused on energy software companies. So what that really means is that we bring in startup companies and entrepreneurs who are experts in the energy industry and have great ideas to help make the energy industry better. We invest in those companies. We bring them to Houston for a 12-week boot camp where they're focused on developing their business plans, their financial models, getting in front of customers, capital, and fundraising.
And the accelerator's gotten some great reviews. How do you differ yourself from some of the incubators or other of the startup assistance groups?
Yeah, I mean, there's definitely a place for anybody out in the ecosystem who are helping entrepreneurs. Accelerators are a bit different from incubators in the fact that they're for-profits. So we raise a fund, we invest that fund into the companies, and we expect to to give a return on investment to our investors.
Well, and we had your co-founder, Kurt Coburn, on the show, I guess it's about 12 months ago.
About a year ago, yeah.
So how have you spent the last 12 months?
So things have been great. They've been a little crazy. We ran our first class of companies. So we invested in and brought to Houston 11 companies. 6 were energy efficiency and smart grid companies. 4 were digital oil field focused, so software companies focused on traditional oil and gas customers. And 1 was an energy trading risk management company.
And how did you select those?
We select them on a variety of criteria that we match them to. One of the most important ones is team. So is the team scrappy? Are they good salespeople? Are they going to be able to not only work on their business and develop their product, but at the same time be out selling to customers? Do they have a great attitude? They're also going to be in a house working with 10, 12 other startups at the same time. So, does everybody get along with them? So that's one big criteria. Another one is how big is their idea? Is it a big market, and is it solving a real pain point? And if they're solving a real pain point, then their customers are going to be more likely to uptake the technology.
Well, and you mentioned in a house. I've been to your facility. You really do bring the companies in, and they're seated right next to one another.
Yeah, they don't live there as in stay the night, although I get that question a lot. But yeah, it's a really large red brick house in Montrose. There are 3 or 4 companies headquartered there all year round, and then there are our 10 companies who come in for the 12-week program.
Pick 1 or 2 of the companies and tell us about it.
A lot of people always ask me, what stage of startup are you looking for? Mm-hmm. And we kind of run the gamut. So we had one company that came in that was an energy trading risk management platform called Molecule Software. When they came to us, they were basically just an idea. But the co-founders of the company were experts in the ETRM space.
ETRM?
Energy trading risk management. They teach energy trading risk management at University of Houston, and they had a ton of experience in the industry. We really liked the team, so we said, let's take a chance on this company. Today, they're about to launch their alpha product. They have 2 pilot customers. They've already raised some money, and they're looking forward towards revenue. And they were in March of last year just an idea. So that one's really exciting for us. On the other side of the spectrum, we've invested in companies that already have revenue, already have customers, already have a product. So one of our our companies was as a company called DrillMap based out of Austin who came to Houston. And while they were very advanced in terms of already having a product and customers, they were software guys at heart. And so they built an amazing product, but had really not a lot of experience in the oil and gas industry and really wanted the mentorship that we provide through our oil and gas mentors.
So what does a day look like for one of these companies?
It depends on the time of the program, if whether we're in the beginning or at the end, but they have a lot on their plates because many of them, like DrillMap, already have a business and ongoing concern. So they have to continue to manage their customers, manage sales, tweak the product, develop the product, et cetera. At the same time, we're running them through sort of a business boot camp. So they're going to sessions on financial modeling, on fundraising, on top 10 legal mistakes for startups to avoid. And they're having to start practicing for their Surge Day pitch, which it takes a lot of time to kind of perfect a TED type like talk about their business.
Tell me about Surge Day.
Surge Day is sort of the culmination of the 12-week program. We have a big event that we put on at House of Blues. All the 10 companies get to pitch their stories in a TED-like format rather than a typical business plan competition format. And we invite investors, energy community members, executives, potential customers. And this past year, we had about 400 people attend for Surge Day, even though it was our first year. So we felt the event was a huge success.
Well, and what did Surge as an entity learn through this process? I assume some things went as planned, some things didn't go as planned.
Yeah, I mean, we've learned a lot. Not only do we continue to expand our horizons in terms of learning about the energy industry and finding new places and new problems that we want to go out and find companies that are solving, but we also logistically and operationally learned a lot from the program the first time, and we'll continue to get better over time and make sure that we're continuing to add more and more value to the companies that come to us.
Well, and as a for-profit entity, will you raise another fund?
Yeah, so we are currently raising a fund for our second class, and we're also starting to take applications for companies for our next class.
How many companies will you accept?
The target is 10. If we have a great pool of applicants, we could take up to 12. If we don't get such a great pool of applicants, probably down 7 or 8.
And how much money do you invest?
For each company, we upfront invest $30,000. That's actually less of an investment and more of just here's cash to get you to Houston and make sure that you can survive while you're working on the business. We also have a pool of capital to invest anywhere from $20,000 to $50,000 into a convertible note for each company.
Well, what are some of the trends in energy that came true to you over the last 12 months?
Yeah, there's a lot going on in the energy space right now. A few trends that are very particular to Surge and things that we follow, especially because we're focused on energy software companies, include things like the generational crew change, which I'm sure you've heard of going on in the energy industry.
Explain.
So over the next 10 years, about 50% of the workforce in the oil and gas industry is set to retire because they're a baby boom generation. Not the entire workforce, but the experienced managers, et cetera. I think a similar trend is going on in the utility industry as well. So for Surge, what that means is oil and gas companies are not going to be able to completely replace all the lost workforce. So they're going to need to get more done with less. We think software is going to be a big piece of that. Additionally, the Gen Y generation is going to come up and is going to be the managers, and they're used to their iPads and their iPhones and thinking, why can't I process my seismic data on an iPad in the field? Why can't I use cloud technology and do all this analysis in the field instead of having to go back to the home office? So we think there will be a lot of changes in terms of software played to the new generation in oil and gas as well.
Well, and some of these traditional energy companies don't move very quickly.
Right.
And adopting some of the new technology, right?
Right. So another big trend that we're seeing that's definitely happened in other industries around the country and that venture capitalists have been throwing around the terms for the last 2 years, big data and cloud computing. Those are two things that we think are definitely going to revolutionize the oil and gas and the energy power industry as well, but haven't quite yet taken a foothold here because of the fact that energy companies just move a little bit more slowly. But we see data crunching in the field, data crunching on the power side, using all the data that's coming off the smart grids or the smart meters that you all have attached to your house now. None of that data is being used, and we need software platforms to be able to use that data and make it into something valuable.
Well, congratulations on a solid first year, and good luck on the next.
Thank you.
And that wraps this discussion with Sarah. We'll be back with more right after this.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show.
Hi, I'm Robyn Knocke. Welcome back to the Energy Makers Show. Today, I'm with Erika Bierschbach of Austin Energy, and she is the Manager of Energy Supply and Risk Management. Welcome to the show.
Thank you.
Thanks for joining me
having
today. Absolutely. Okay, so let's start off with some basic questions on Austin Energy, and I think most people have this question. Who is Austin Energy, and what is the difference between the Austin Energy vertically integrated utility and the rest of the state?
Austin Energy is the 8th largest community-owned electric utility, and we have about a little over 400,000 customers. We have approximately $4 billion in assets, a little over $1 billion in revenue. We are governed by our city council. We are a department of the city. So we are what is called in ERCOT a NOE. It's a non-opt-in entity. So there's several of us in the state, and or in ERCOT, I should say. And what that means is that the individuals or the ratepayers, the people who receive electricity from Austin Energy, do not have a choice of another provider like people do in other cities and other parts of ERCOT.
Okay.
So that's how we're different from, among other things, with other retail providers.
So how does that affect the assets that you own and how the utility is actually operated? You think of a retail electric provider and then they don't own generation. So how does that work in Austin?
Right. So we own quite a bit of generation, and we have purchased that generation over the last many decades, as well as the things that we do in the future for to meet our renewable goals through purchase power agreements for our ratepayers. So our ratepayer is our shareholder, and we give that money back to the shareholder through a general funds transfer that's done annually. This year it was approximately $105 million.
So as a non-opt-in entity, is there a chance that Austin could become a deregulated city, much like Houston or Dallas?
Yes, absolutely. It would take legislative change for that to occur, and there has been movement, and there is every couple years during when Congress is in session to have that occur. But it seems that we seem to stay as a department of the city and show that benefit to our ratepayers, as well as through meeting their needs. Through all the programs that we talk about, we're really looking to try and provide just a basket of services to our customers, and through the Green Choice program, the rebates. We are part of Pecan Street. We have innovations with regards to plug-in vehicles, the electric vehicles, and all of these things. Austin Energy looks to try and meet that diversity of needs for the ratepayer. So, trying to provide that clean, affordable, and reliable energy that has kept us with that NOE status, but that can change.
I think they only threaten it in the Capitol when they're coming up for renewal of their contract with the city of Austin. That's my belief.
Seems to be some correlation
there's some
there.
correlation there. Let's talk about those renewable energy goals that you touched on. Austin is very much known as a green city, probably the greenest, or arguably one of the greenest. San Antonio might make an argument
they're
against
on our heels.
But what are the goals for Austin Energy, and how do they plan on reaching those?
Sure. Austin Energy is very passionate about its renewable goals. It's been an early action taker. We signed our first wind contract in 1994, so we've had renewable.
I think that was before wind.
We have one of the first wind turbines out there. Maybe it's just one out there now, but anyway, we have started. We started very early in our initiatives, and we currently have a 35% goal to be 35% renewable by 2020. And 200 of that is pegged to be solar. 200 megawatts of that is pegged to be solar.
Okay.
And so we are very passionate about that part of our portfolio. We're also currently looking for 800 megawatts of demand side management or savings through energy efficiency goals by 2020, as well as reducing our CO2 emissions to be 20% below 2005 levels by 2020. Okay. So those are some of our goals for our renewable portfolio. And
now, Austin Energy also has a Green Choice program,
yes,
which I'm a member.
Oh, fantastic. Which batch are you, do you know?
I've been a part of it for 5 years.
Okay,
so
I can kind of get you. I know vintage where you are. Actually, the Green Choice program, a very successful program. We've been. It actually kicked off at the beginning of this decade, or this century, I should say, 2001. We were number one volunteer-sponsored utility. Or not volunteer-sponsored, utility-sponsored voluntary program since for the last 9 years, and currently we have we're in we're in the 6th batch, and so we have available renewable power that our customers can switch to, and it's at 5.7 cents a kilowatt hour. Currently, the fuel charge is at 3.6, so it is a premium to where the current fuel charge is. But
not significant, like people would expect.
Well, and the other feature that adds to, that would give you the value for that premium is you will have that rate until 2021.
Well, we've talked a lot about the renewables for Austin Energy, but do you have any standard fossil fuel generation in your fleet?
We do. We have a share of STP, which is South Texas Project, and that's a nuclear plant. We have 400 megawatts there, and we are partner with 2 units of Fayette plant out in LaGrange with LCRA, and we have approximately 570 megawatts out there. And then we own 2 gas plants, which are close to Austin, Sandhill and Decker.
Okay.
Decker's an older vintage, and Sandhill is one of our newer plants in our fleet. And so those are going to be your standard ones that, or our base load generation for the nuke and the coal, and then our gas, we have peakers as well as the combined cycles. One of the items we've looked at is in our resource plan is over time whittling down that generation and replacing it with other generation that is more that would reduce those CO2 emissions. There's a cost associated with that, so that's something that we don't want to impact have an impact on our ratepayers that's very detrimental at one fell swoop. So what we're looking at showing our city council members and our ratepayers is something that would potentially have us slowly unwinding that gen or lessening it, the amount that is in our portfolio, and replacing it with cleaner energy.
So one of the beauties actually of the South Texas project nuclear is that that's very inexpensive power, and so you can bring renewables online, and that's balanced with the very low cost of the nuclear.
Absolutely. It is. The nuclear, we have a very small percentage out there, and a decision was made several years ago to pass on increasing the amount of nuclear in our portfolio. So we did that. It was, once again, it's listening to the ratepayer and trying to understand what their wants and needs are, as opposed to just looking at the bottom line of the dollar.
Well, that's some fascinating insight from the Energy Supply Manager for Austin Energy. Thank you so much for joining us.
Thank you for having me.
Absolutely. And that'll wrap up this episode of the Energy Makers Show. You can hear us on the radio, or you can see us online at TheEnergyMakers.com.